The analysis of which direction the overall market trend is moving, or the analysis of an individual stock price trend, is much more easily identified or analyzed using the information built into candlestick charts. Now, because candlesticks are the graphic depiction of investor sentiment, it shows you exactly what's happening right at that time. So you can see what was happening in the Dow. There was a wedge formation in progress. However, when it failed up here and we saw sell signals and a close back below the T-line, the prognosis was that there was still a wedge sideways movement in this market. However, with you being below the T-line, you're probably now should be more oriented toward having short positions in the portfolio. That's why our daily comments usually referred to any long positions required maintaining a strong trend by staying above the T-line, and you should have short positions in the portfolio. Now, did that necessarily tell us we were going to move in this direction with that magnitude? Definitely not. But it already had us situated where we had short positions on because it was still drifting and we were trading below the T-line. So our long positions obviously became fewer. As long as they stayed strong, we remained in them, but we kept adding to our short positions. Not that we had any clairvoyance of seeing that this might happen. It was just based on the prospect that as long as you were below the T-line, the probabilities of heading lower were that much greater. The same scenario could be applied to the NASDAQ stocks as they gapped down through the T-line. So the uptrend failed when we saw our left-right combo, a very strong sell signal, and then they closed below the T-line. That told us the bearish sentiment was taking control, that even though we might still have some long positions that were working, we should have short positions in the portfolio. So when you apply that analysis to individual stock prices, such as Netflix, notice the bearish engulfing signal. And they finally closed it, or they gapped it down through the T-line a few trading days ago. What is today? I guess it was Monday. That told us immediately that the prospects of this heading lower was much greater than it heading positive unless they could close it back up above the T-line. That told us that if we started doing short strategies on Netflix, the probabilities were in our favor. Our recommendation to go short on ACRS was based upon the bigger the signal, a big bearish engulfing signal that failed up here at the 50, and a close below the T-line told us we could stay short until we see a candlestick buy signal and a close back up above the T-line. This is not rocket science. Human nature works the same way time after time. The Japanese rice traders showed us the signals and also told us what the investor sentiment was that created those signals. So that combination of information where you can visually see the signal and know what that means puts you in a very powerful position to have control of your own investing no matter what market you're trading. Stocks, bonds, futures, currencies. Investor sentiment works the same way in any market. That'll be it. We'll see you in the chat rooms.